Good morning, thanks for your company. Well, the Aussie share market started on good footing today, up in the order of about 3% just in the first half hour of trade, but investors quickly took those profits off the table. Today's rally is really fueled by two things. One, in Europe, the ECB launched a $750 billion stimulus package, and secondly, the market is in hopes that the RBA will cut rates at 2:30 today, with rates expected to be cut for the first time in history to a new record low of 0.25%. We're also expecting quantitative easing to be introduced to inject new money into the economy to support businesses and encourage business lending. Financials are up 3.4% today, followed by those defensive sectors like healthcare, staples and utilities. Among financials, the asset manager Janus Henderson is up the most, 8%, boosted by share buybacks, which prop up the share price. CBA is up the most out of the big four banks, up about 4% earlier. This year it's also outperformed the Aussie share market, but the real question now is, with pressure mounting on banks, how much money will they be able to make and how large will their margin be after today's expected rate cut? In terms of healthcare stocks, Cochlear and Ramsay are up the most, about 5% earlier, with CSL up 3%. In staples, stockpiling has pushed Ingham's poultry business up about 4%, followed by Coles and GrainCorp. GrainCorp was upgraded overnight to a buy. It's up about 3%. Bell Potter has noted that it's had 3 months of rainfall of a solid outlook. That's improved over the last couple of weeks, following below average crops over the last couple of years. So it looks like GrainCorp is really turning a corner as its outlook looks optimistic. Year to date, their shares are also only down about 1%, also outperforming the Aussie share market. The only sector in the red as we speak is energy, as the oil price hit a new 10-year low overnight, $22.42, and pressure remains on those travel related stocks, with Flight Centre down about 20%, corporate travel down about 16%, with Qantas announcing yesterday that international flights will be cancelled later this month. Among gold miners, Newcrest and Northern Star, they're down about 6% as gold prices lost 3% of their value, falling to $1,477 an ounce. And turning back overseas, money flowed out of global equities overnight, out of bonds and gold. This was, of course, before the ECB launched their emergency package. We saw the US benchmark S&P down 5.2, the Nasdaq down 4.7. Defensive staples and healthcare stocks in the US are largely pushing ahead or holding their ground. We saw Walgreens push ahead, while some diamonds in the rough defy the odds, like cybersecurity company Acme Technologies, which rose almost 10% overnight, hitting a new decade high, while the US dollar has pushed 1% higher as investors invest in the most liquid of the currencies, the US dollar, and that saw our Aussie dollar hit a new 17-year low, 57.87 US cents, and that's where the Aussie dollar last traded in January 2003. That is not so good for importers, but it's great for our Aussie exporters. Have a great day, stay safe, happy trading.